Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into the charts for Bitcoin. We were in an AMA with our Patreon members earlier today and we had a fantastic question from one of the members there, and I kind of want to go through the technical analysis that that particular question actually rose. So guys, as we get into this video, if you do find this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely all the videos that we do here at Cheeky Crypto. Right, in the description down below you will find links to our Discord server. If you haven't already come across and joined us, go check it out. It's completely free. We're in there 24/7. There's a fantastic community talking crypto 24/7. Also in the description down below you'll find links to our Patreon service. As we said earlier, we do AMAs twice weekly with our Patreon members, and we basically go through lots of various different things, from trading and strategies, just general kind of Q&A, things that are happening in the space and all that kind of stuff. So if that's something that you're interested in, then why not give that a check out, and we'd love to have you over there and join us on the AMAs. Right, with that said, let's actually jump on down into the desktop and let's take a look at the question around Bitcoin and what it might actually mean. Okay guys, so the question that we had from our member was, is there a different way to count the waves that could actually mean that we move up to about 45k before we go down towards that $37,000 Bitcoin? Now, for those who are familiar with the videos, we've been talking quite heavily about the move down to $37,000 Bitcoin. Okay, now this is obviously backed up not only with our hourly move, with these impulsive moves coming down towards $37,000, but on the daily there's also a C wave that looks like it's going down, and it measures out a 1-to-1 ratio at $37,000. And again, we have a B wave on our weekly chart. Okay, and this B wave is after a big A wave up, a B wave correction B wave down on our weekly, and that is the 702 at $37,000, and then obviously that takes us up into all-time highs at about 77k. Okay, so there's a lot of analysis here pointing towards $37,000. This then obviously prompted that question, is there a different way to count the waves that actually could see Bitcoin first go up before we see a pullback down? And absolutely, because the waves that I've drawn out here, they are, for a long period of time, actually kind of just bumping along without actually going down dramatically. It's not like a needle just dropping straight down to 37k. Instead, we have several waves that need to play out before we get down to, 37k Bitcoin. So, yes, there are absolutely different ways that we can count it, and it's not really visible on this chart here with so much noise. So what I'm going to do is I'm going to come over to this particular chart. This is Bitstamp rather than Binance, but it is still Bitcoin paired up with USD. Okay, and what we're going to do is we're going to basically take a look at this and compare it to our current standpoint here. This is Binance data, so we can see that we are tracking quite nicely to the downside, but there is another way that we could count this that is really important. So what we're going to do is we're going to come over to here and we're going to take a look at just that. Now, obviously, we are targeting down here at $37,000, right? This is an approximate area. I'm not going to mock it up exactly. I'm just going to choose like 37,800. I think it's more like 30,600. We'll just leave it there. Okay, so that's kind of our target. That's kind of where we think things are likely to go in the kind of longer term, right? Where we think, let's say longer term, but medium term, right? Before we go up to all-time high, I think we first have to come down to this point here. Obviously, though, what that causes, specifically when there are multiple influencers talking about Bitcoin and potentially downward trend and your kind of crash, golden cross or death cross or whatever it may be, right? It'll be in the case of death crosses pulling us down, right? So what we're really talking about here is loads of people, loads of retail investors with that kind of knowledge in their heads thinking Bitcoin's going down to these kind of thresholds, we'll short the market. I'll leverage my position and I'll short it. That in essence actually creates a pocket of liquidity. Okay, and that liquidity, for example, could be up here at $45,000. Okay, and this is an important concept, right? Because there's usually a stop loss, or in the case of leverage, an area on the chart where you'll get liquidated. If there's a load of retail investors at this point just here deciding to short the market, and up here is actually where they get liquidated, as in all their Bitcoin flows over to the exchange or to a whale who's buying it, or that buying into that liquidity pocket, you'll actually find that the price will move up before pulling down, because at this point here, all of those liquidations and stop losses and all that kind of information is readily available, which means a whale or a group of whales or market makers could say, actually, before we come down here, which is, you know, a technical move that's likely to occur, let's first of all go up there, liquidate everybody, buy up the pocket of liquidity, and then crash it afterwards, right? And that's in essence what you see happening quite a bit until retail investors decide not to use leverage and actually just to buy an asset. If you can't afford to buy it and you're just trying to gamble and multiply your gains, and you know you're going to get liquidated more and more and more and more. Okay, it's unfortunately an unregulated market, so you have to be aware of it. Okay, and institutional investors, whales, etc., they don't just operate in the same way that a retail investor does. They operate on liquidity pockets. This basically allows them to buy up without moving the price. Okay, it's basically person A's Bitcoin flows over to person B's wallet once this particular threshold is hit, right? And you know, these liquidation events, they are quite bad for retail investors, but actually really, really lucrative for whales and institutions, right? You saw Binance buying up 43,000 Bitcoin recently, but you didn't see the needle move up rapidly with 43,000 Bitcoin reaching their wallet, for example, right? So it's important that we understand, you know, that institutions, whales, they operate differently. They don't just buy at market value, etc. They know where to be buying. They know where to push the prices, and in order to basically take advantage of liquidity, okay? And it works in both directions, okay? So imagine that once you're down here, there'll be heavily shorted markets, and actually what you'll find is the price will move up, liquidating them all, okay? And then you're kind of free to go. Now, from a technical standpoint, you can argue that it's harder and harder in these unregulated markets to get it right, okay? And obviously it is. Instead, what you end up with is running the I guess the ground of probability. What is the most probable outcome? Okay, so let's get back into the wave counts. Obviously, I have wave counts of 5 coming down here. You know, 1, 2, we're looking for a third wave, fourth wave, and 5 wave. That's kind of how I see it. And all of this here is actually a part of a much bigger play. If I actually draw this up here, I'll just quickly mock this up. We have, you know, wave 1, let's say wave 2, wave 3 here, this is wave 4, and this is wave 5. Right down here, okay, at $37,000. Okay, so what we're actually looking for here is, you know, a series of wave counts, and inside here, I was going to just be really rough, guys. I apologize for this, but wave 4, 5. There's 5 waves inside there, for example, and in here you'd also have 1, 2, 3, 4, and let's say 5. It's not exact, I'm just roughly drawing it. And what you end up with is basically a 5, 3, 5, 3, 5 wave count. Okay, I'm just going to quickly remove those. They're in there. You don't have to worry about them too much, right? But the idea is this is how I have it drawn. Obviously, there are a couple of things that are really important about this. There's going to be invalidation points, points where we need to be very aware of. So I'm going to grab my horizontal ray here, and I'm going to throw this on. There's a first area here, $44,500 just up there. Okay, that's the first thing. If we actually go up higher than that area there, then it invalidates the move, right? There is no you know, there is no 5 waves right here on the smaller time frame. It just means that this fourth wave is higher. Of course, there's an invalidation point for that fourth wave as well. Okay, so we should be aware of that. So let's quickly go ahead and grab that invalidation point. That would be up there. So if the price moves up above this point, no longer is this. Actually, it's not even there. It's actually down here. What am I doing? Rookie mistake. So basically, if wave 4 goes higher than wave 1, then obviously that's invalidated as well, right? So it's not a fourth or fifth wave, right? So there's a few things that we really need to be aware of, okay, in order to really pay attention to them. Okay, that being said, that this move to $37,000 can be invalidated. It can be invalidated if the price goes higher than 45,600. Okay, or just call it 45,700 to be exact, or, you know, to be a little bit more safe on it. Now, obviously, if the price doesn't move up there, then we should be, you know, cautious about it a little bit. Now, alternative ways of counting. Okay, so that's how I have it mapped out. But what if we were to look at something differently? Before we go down to 37K, is there a different way to count this? Absolutely. Okay, and this would be invalidating our fifth wave down. Okay, or potentially really pushing this fourth wave to the extreme. Okay, and so in order to do that, what we'll do is we'll have an A wave coming up here, a B wave coming down, and then we're looking for a C wave up. Okay, now if we go ahead and measure the distances on this particular move, and we move it over to here, we can see that the C wave has the potential to be a 1-to-1 ratio at 46,750. This would invalidate the fourth move, a fourth wave move, and prevent us from going down to $37,000. Okay, it would no longer happen in this particular wave count. Some other form of wave count would be required to do so. Okay, but this is a very valid move, right? Until, of course, we invalidate it. This would be invalidated at the point of actually crossing lower than this threshold of 39,570. Until then, this B wave can continue to go down, and it can cross, and once it crosses that point there, it's invalidated, okay? So I really thought this was an interesting question, because obviously I've drawn it up with how I see it, right? I can see that we have 5 waves here, we have 5 waves here, and, you know, most probably we'll end up with 5 waves here, okay? And if we actually track this, we can see that we have an ABC with a flat top at the top here as well. So 3 waves there, and here we have actually you know, quite a few waves going up here with a double top. So they overlap though, so it would be some kind of corrective wave. It actually looks like 1, 2, 3, 4, 5, 6, and 7. So again, I would class it as corrective 3, but effectively 7 waves are in there. So basically, a 5-3-5-3-5 is kind of what I'm expecting to happen, but it doesn't necessarily mean that is what's going to play out. That's just what I believe to be the most probable outcome here. So this question was really valid. It was a very good question because it actually makes you look at your analysis and think differently. How could you actually take a look at this and think, hey, how do you move up to those higher ranges? How do you see that playing out, and could it play out? Right now, we are obviously going to be testing this B wave low, and you know, it'll be interesting to see how this plays out. It's very possible that the C wave also moves up into that range of $45,000, stopping short, finding that resistance just up here, and then getting a reversal, and we still see that fourth wave being accurate and a fifth wave come in as well. Obviously, it's far too soon to say. I think both of these counts on Elliott wave are very, very interesting ones that we should be aware of, and things that could actually play out pretty interestingly for Bitcoin, and specifically when it comes to liquidity pockets being in very key specific areas. You might find that as soon as things start to move up, and the liquidity pocket certainly emerges down here as people start to long Bitcoin, for example, and maybe there's going to be a reversal in that before Bitcoin moves up, for example. So yeah, really interesting, and I thought I'd do a big video on it really, just to put it out there so that everyone kind of thought that, or could see that actually there are multiple different ways to count the waves. It really depends on what your personal outlook is, along with additional metrics, etc. It does look like Bitcoin needs to move up within the wave counts as well. So, you know, a $46,000 Bitcoin before any major kind of pullback is something that is very, very possible. Obviously, with the way that I have my wave set out, I can see it not really pushing past 45,700, and that would invalidate the entire move down to 37k. But you know, I wouldn't mind seeing Bitcoin actually surge to the upside and actually have this B wave low on our weekly chart come in early. There's no reason really to see it pull back down to 37k. It's just an area that is being indicated across multiple different timeframes for me on the charts. Obviously, it's very possible that we do have a slight push up and then a huge pullback as well. So guys, it's you know, anything is possible in crypto, but I do think the most probable outcome is 37k, even if we do push up to those higher ranges of 45k before we get there. Ultimately, we're seeing pockets of liquidity be mopped up before we actually start to pull back down. Guys, if you found this video useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you will be kept up to date with all the videos that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.